Hello day traders, I'm Maria Staradop and this is the review of crypto analytics from fx.co. It's the 2nd of February today, Thursday, and as we all know, yesterday there was a quite important event for all markets and crypto markets, especially the Fed's meeting. And today we will observe several analytics opinions on the point of how this event should have impacted the quotes and what to expect from the flagship cryptocurrency next. And in the end, we will have a look at the real picture for the moment. And we will start with an article by Paolo Greco. And here Paolo provides an opinion by famous crypto analyst Peter Brandt, who says that Bitcoin forms a rare technical figure known as double bottom. He asserted that following the development of this pattern, Bitcoin should experience again at least $25,000. He pointed out that Bitcoin has overcome significant resistance in the form of 19,000 level and is getting ready to resume its upward trend. He says that he sees right now that the bearish trend is ending and the bulls managed to establish themselves above the 20-day moving average. However, the cryptocurrency still remains below both 25,500 critical level and the 200-week moving average. So far, in his opinion, the trend for Bitcoin is bearish, but if he succeeds in getting through this point, this will change everything. Here Paul expresses his own opinion on the point and says that he does not understand why this favorite level 25,000 is significant, but he does allow an increase to 24,350. In light of the current situation, he considers this level to be the maximum level of growth for cryptocurrency. The price never stopped rising and never reached extremes at around 25,000 at that point. The most significant reports on the labor market, unemployment, wages, and meetings of the largest central bank across the world will be left out on Friday evening, so this is the day when we can make some conclusions. Of course, he points out at the Fed's meeting. It was held yesterday's evening already. And he says that the main focus of cryptocurrency traders' attention was on this event, and meetings of the ECB and the Bank of England are less important and are not expected to affect the cryptocurrency's move. So in the upcoming days, all decisions should be made, and a bullish trend formation will be seriously discussed if the bulls break past the 24,350 resistance mark. If not, the option with a decrease to 12,426 will still be relevant. And now let's get to another article by Artem Petrenko, who says that Bitcoin enters February with some baggage which may negatively affect Bitcoin's bullish prospects in the new month. First of all, Bitcoin ended January on a bearish note, forming a bearish engulfing pattern on January 30th. On the last day of the month, the bulls failed to regain the initiative, and the formation of a weak green candle raised even more questions about the viability of the bullish trend. The cryptocurrency has been continuously moving upward throughout January, practically without interruption for local correction. And most of key resistance levels were taken in 1 or 2 days, which provoked the emergence of several disturbing factors. The first is the technical overbought of the cryptocurrency, which was reflected in all key indicators of Bitcoin. At some point, on-chain metrics stopped keeping up with the rise in the price of Bitcoin, which once again confirmed that the asset was overbought and provoked another alarm signal. A sentiment that is dangerous for a bullish trend began to form in the market, and more retail investors have changed their profile to an upward movement, which at some point will lead to an imbalance of short and long positions, and Bitcoin quotes will begin to storm due to increased volatility and price manipulation. Also, Artyom says about Fed meeting, and right before the meeting, Bitcoin was trading near the 23,000 level, but it was clearly at a crossroads, and he says that we will soon find out which way it will go, and we will quite shortly see it on the chart. The key rate should have been raised by 0.25%, but everybody was afraid of some comments by Jerome Powell, some not very positive comments, let's say. So, as for Bitcoin analysis, its technical picture of the current week, the trading volumes in the Bitcoin market have significantly decreased. This is partly due to the local overbought of the asset and the sharp change in the market sentiment. The additional fuel, which was the short positions of the skeptics on Bitcoin growth, is gradually fading, and soon the market will react only to news events. This is the key reason why Bitcoin needs a decline, he says. Further growth at current volumes will lead to a false breakdown of one of the resistance levels and painful fall in the quotes of the digital asset. We have reached the point, Artyom says, where the bulls cannot continue the bullish movement as they did a week ago, and the sellers are gradually gaining volume. In such situation, correction is almost inevitable, but extremely favorable for the further upward movement of the cryptocurrency. Its depth will largely depend on the movement of Bitcoin's partner, S&P 500. If the asset, the S&P, hold the 3,900, 4,000 range, then the cryptocurrency will be able to maintain the 22,000 level. If we look at the chart in the short term, Bitcoin technical metrics point to continued sideways movement. In the previous weeks, this was necessary for the accumulation of short positions where were subsequently knocked out by updating the local high. And in the current situation, we should expect another attempt to gain a foothold above 22.9, 23.4 range, which will lead to a deeper price drop. However, the need for a corrective movement does not cancel the medium-term plans for Bitcoin to reach the 27-28 area. So, as a result, Tom says that Bitcoin is gradually approaching the beginning of the correction phase, which has many derivatives. Most likely, the Fed meeting will be a trigger for bears to finally seize the initiative and launch a corrective movement. Okay, let's have a look at the chart for the moment and see what happened. So today is the 2nd of February, and what do you see? Right after the meeting yesterday, Bitcoin went up, not down, but up from points about 23,000. It reached almost $24,000. It opened today at 23,733, and now it is trading at 23,811. So far, we do not see the consolidation phase. We don't see the decline most of analytics promised, but we should remember that the Fed's meeting was not the only important event of this week, and we should wait until the end of the week when all the events will be over and we can make some conclusions already. This is all for today. As usual, I wish you profitable trading, successful day. Follow the news, leave your comments down below, and till next time, see you in our next review.